I had a friend/client reach out to me a few weeks ago and ask me if I knew anything about purchasing homes subject to the existing mortgage. Now, folks, we're not talking about assumable loans here. We're talking about non-assumable loans. And he was asking me if I could help him find properties and locate people who were down and out and they could just take over that mortgage. And I said, no, you can't do that for all these reasons. And he got really angry with me on the phone and said, the videos I was watching on YouTube said you realtors and brokers would say a hard no because you're not creative, you're not open-minded, and this happens all day long. Well, let me tell you folks, it's gonna come down and this is fraudulent, and I'm gonna go through what I've learned because I did do a deep dive. And when I went on YouTube and looked up the subject, I'm shocked, shocked at what I see out there. So this is really education for the people watching this. Don't get involved in this. And I will also share just briefly some of my experience that I've had with the IRS and how you should fear them. They are very powerful, and we'll just say you want to avoid them at all costs. Who's the target for somebody willing to sell their house with their current mortgage in place? Those are the people who are the down and outers, or have come into difficult times, or potentially had somebody pass away and no longer can afford the property, or maybe they bought the property a year ago and to sell the house with commission and a slight downturn in the market, maybe they would lose money if they were to sell the house. Well, these people who purchase these homes subject to the existing mortgage will usually give these homeowners a fee up front. Maybe it's $10,000, $20,000, $30,000. They go, hey, I'll tell you what, we'll give you this money up front if you allow us to purchase your home and just leave that mortgage in place. When you get a mortgage, you sign 200 pages, and in one of those documents, there's an affidavit, stating that, yes, I am the person who's qualifying for this property, and I am adhering to all the terms in the contract. And one of those terms is what's called the due on clause notice in that mortgage contract, which states that if there's any ownership change and the mortgage company needs to be notified, and if they're not, they can foreclose on the property, or they can require full payment upfront because you are no longer the person who is taking ownership or title of that property. You are a homeowner and you're participating in transferring ownership to a potential buyer, and you're not notifying your mortgage company. Understand that that is fraud, okay? You are no longer the owner of the property if you sign this long subject to existing mortgage contract who the buyer will provide to you, and you will sign all this information, and you are directly defrauding the mortgage company. Do you understand the significance of that? You're letting somebody else who has not qualified for that mortgage, they may have no business even owning a home, you're allowing them to take over your mortgage payment for a fee, a profit, right? Okay, guys, this is very, very bad. Do not do this. But let's go into a few more things. So the advantages that are marketed out there on YouTube and other social media sites about this program is they say, hey, for all of those of you out there who can't qualify for a loan, or maybe don't have that down payment, or don't want to pay those higher mortgage rates, we have a program for you. Now, right there, that should be a red flag, okay? Anybody that doesn't have enough money to put down on a property, or anyone that can't qualify, or anyone that can't qualify for the higher rate, you got to understand they probably have no business owning a home. And I'm sorry for those of you out there. I get it. Like, home ownership is very hard right now because rates are so high. You just can't do it illegally. It's not worth it. Like, just don't. But in 2008, remember, there was a huge collapse. People will say adjustment, but I say collapse. We all felt it was a collapse in the housing market because anyone in the world could qualify for a loan. And we had so many homeowners out there that when the market corrected is the right word, they weren't able to pay those payments. They're like, why am I paying all this money for this house when it's not worth it? So there were new guidelines set for the government for qualification purposes for any mortgage. They're very strict guidelines. Common sense tells you, does this make sense? Would the government be okay with having all these people buying these homes subject to the existing mortgage when they aren't going through the proper qualification process? And the answer, folks, is no, they would not. When I first heard about this program, I'm like, okay, so I'm watching these videos. I'm realizing this really does happen every day. A lot of people are doing it. And my question is, how in the world does the mortgage company not know that there's a change of ownership? So I called my title company. I called several actually, and they all came back with the same response, which is, no, we don't notify the mortgage company if there's title ownership. We just make sure that the buyer of the property understands there is this lien on the property. And yeah, we don't have any problem with this subject to an existing mortgage clause. It's kind of not our business, and it's just a lien against the property. And if they're okay with it, then we're okay with it. I was horrified. You guys, I'm telling you, if it's not in place now, it will be in a few years, where the title company, if there's a change of ownership, is going to have to notify the mortgage company eventually. I'm telling you, it's going to happen, and you don't want to be caught if you're participating in something like this. Once again, I'll share my story in just a minute, but you don't want to be on a first name basis with the IRS. Apparently, title doesn't care. They are like, yeah, go for it. We don't care. We're just going to look the other way, and we don't care if the mortgage company is defrauded, which blows my mind. I'm like, are you kidding me? But when I did contact my escrow company, now the company I use is Escrow Options. Colleen Mackey is her name. If you need an escrow company, I'll link her information down below. But she about panicked. She's like, Audra, no, we can't even talk about this. We're not even going to entertain this offer. I'm like, no, it's not an offer. I'm doing a YouTube, and I am trying to, educate some of my followers, some of the pitfalls out there. What can you tell me about this? And so she just said, Audra, there's no way that we would move forward on any transaction that was subject to an existing mortgage unless it was an assumable loan. She's like, we can't go look the other way and not tell the mortgage company because we know something exists and we have to disclose it, or we could lose our license, and this is not the business that we're in. So not saying other escrow companies won't do it, but we won't touch it with a 10-foot pole. That's very telling, right? And I think that is sound advice. And if something sounds too good, it probably is. And if you're taking a risk, the reward might be great, but the downside could be even worse. So let's just say a home buyer gets this thing done, okay? Title looks the other way. Shady escrow company goes, yeah, we'll get it done for you. I'm still baffled as to how the mortgage company isn't notified, because whenever you have a change in ownership, you have to get new insurance for the property in the new owner's name. And the mortgage company will be notified that there's been a change in ownership, right? These buyers will actually purchase the house as a trust. So when they go get insurance, the insurance quote is also in that name of the trust. So the mortgage company is notified that there is new insurance with a new owner, and they go look at the owner's name and they see it's a trust. The mortgage company will ask for details, and they'll go, oh, okay, that looks legit, no big deal. Well, mortgage companies are starting to, wake up a little bit and realize this is going on. So they're asking for more details. So now they're asking for proof of the trustee. And then they see the LLC, right? Which these people, by the way, who are doing this are not recording these LLCs. They just have it on a piece of paper set to the side, also illegal. Anyway, mortgage companies are waking up and realizing this is happening. And don't you even think that there's not going to be some type of program that the government's going to come out to flush this type of business out. Now, unfortunately, from the research I did, a lot of elderly people are being taken advantage, which just breaks my heart. They don't know what they're signing. Some of these, we'll just say people who are online that are talking about this and selling their programs are recommending that when these elderly people or when these home sellers are signing the document, that they have an attorney present making sure that they explain the process to them, which we all know. Attorneys talk at 7 levels above understanding. But once again, this has sleazy fraud written all over it. I don't love this at all. Now, if you're a home seller and you are considering doing something like this, or if you already have done something like this, realize that if you go try to purchase another home, let's say you came into a different financial situation, or you got married and you want to buy a house together or whatever, right? Understand that your credit is tied up into this mortgage that you handed off to the homeowner, okay? Your credit is tied up in that. That's not good. That's not wise. Don't do it. Another concern I have is the person who purchased the home subject to the existing mortgage. What happens if they stop paying the mortgage? I mean, yeah, the house is in their name, but the mortgage is in your name or the departing resident, right? And their credit's going to be impacted. It's just not good. It's too much risk for anybody involved. Something else I'd like to consider is, okay, so we had the new homeowner who bought the property subject to the existing mortgage. You know, they're writing off the mortgage interest on their taxes. But how can they do that? Because the mortgage is in somebody else's name, right? That doesn't make sense to me. Please help me. Now, I'm sure the people who are, doing this, they're going to say, oh, well, we'll put the homeowners or the previous homeowner's name on the trust, but we'll have a separate secret document that says they're not really on the trust. Okay, guys, that's not good. That's deception. Ugh! Don't do this. Something else to note is when you make an offer and you want to keep that mortgage in place, you have to have an addendum to the contract explaining the details. So if you were to have an attorney write this subject to an existing mortgage clause into the contract, it's going to cost you probably $10,000 to $20,000 just for the legalese to put them together. So I do believe there are some, we'll just say, companies that will sell this document, but it is very expensive. Or you have to be affiliated and join a conglomerate that will work with you, which that doesn't seem right either. Like, we know this is not probably wise, and they're the ones profiting off of you investing with them. Be aware of that. The people that are promoting this subject to an existing mortgage, they're recommending that you do the change of address before you close escrow. And that address should be located somewhere near the house, because they don't want the mortgage company to wonder, why do you have your mailing address in Wyoming when the house is in California? Okay, once again, like smoke and mirrors, you're trying to hide something. Like, okay, you guys are with me, right? Like, this is common sense, I would think. I did a little creative financing back in 2011, and it has absolutely rocked my world this last year. It came back to bite me in the butt. And I won't go into a lot of specifics, but I'm just telling you, you don't want to do things that seem too good to be true. So back in 2011, I made a $75,000 investment with this company, and it was a shield. So I was hedging interest rates because I had two properties that were on a variable mortgage, and I wanted to hedge my bets. And so pretty much what it was is the first 5 years, I got some tax deductions, but in the following 5 years, then I had to pay all that back if rates didn't go up to a certain level. And we ran this, me, my husband and I ran this through some actuaries. We had people who were in the IRS, go through and see if this was a legit program. They all agreed, yes, this is fine. But if anything goes sideways, just remember that you need to have those money set aside to pay those taxes. We're like, yeah, we understand what we're getting ourselves into. But what we didn't understand when we made this investment was that we were investing with people who were crooked. And we invested with them in an LLC. And unfortunately, 2 years after we made this investment, the IRS made some law that says, no, you can't do this type of investment, and came after us and said, by the way, we're slapping your hand, you can't do this anymore. And so we realized, okay, we were, kind of gambling, but we understood, we paid our bill, no big deal. Now, the people we invested with showed us bank accounts, they showed us how much money they're putting into that was their own money. They had us talk to previous customers, and they were just raving about, what this investment did for them. And they assured us that we did this for years, and it's not a big deal, and it's not illegal. And so we did our due diligence. And so we move forward. But deep down inside, like if you're getting huge tax benefits, I shouldn't say huge, but moderate tax benefits, you got to ask the question, does this make sense? And, could I be caught? And what are the downsides? Which we did experience, but we did not expect this. So we get a notice in 2021 that we owe this huge tax amount, like whatever, oh my God, whatever you think is a lot of money, like times by like 100. And I still don't know how we paid it off. Like, I'm working like an animal to make this happen. We weren't even affiliated with this company in 2010, and the IRS deemed that since we made this investment, the $75,000 investment as an S Corp, that we had ownership in the company, and therefore we owed a portion of their bill because they did not pay their bill. We did, but they didn't pay their bill, and since we were an S Corp, we got delved out, probably in my opinion, the largest pie, because I can't imagine anybody having a bigger bill than we had. And by the way, anybody you're talking to at the IRS has no decision-making abilities. Most of it's just, computer generated stuff. The person you're talking to on the phone is a collector, and they don't care about your situation. They only care about getting the money. And I'm not here to trash the IRS. Like, clearly it wasn't a wise investment, clearly, even though we did all the due diligence and even though everybody gave us the answers we wanted. But my point in even sharing this with you is when I heard the subject to an existing mortgage, oh my gosh, it felt like deja vu again. It felt like something very similar. And I wouldn't want anybody watching this video to even consider doing something like that. And I've also had clients in the past say, hey, Audra, how much do you think I can get away with the deductions on my property? I don't have all the receipts. I'm like, no, do not skimp. Like, guys, I'm telling you from experience, you don't want to mess with the IRS. And we had some pretty good attorneys on it. And by the way, the company that I did invest with this horrible situation was a company called Aegis Art Shield. This is not Kathy's company, but if any of you have ever heard of anything like that or have know of anybody that has gone through this, I'd love to hear from you. Not that I want to fight. I can't believe that I have to pay somebody else's bill that I wasn't affiliated with back in 2010. Like, that doesn't seem right. When you're dealing with the subject to an existing mortgage or any type of, I'll say, investment for tax purposes or for your benefit, like you hear a lot of these mineral rights. There's some, tax benefits for doing that. It's just a matter of time before the government, the higher ups, to figure out that this is no bueno. If you are working with an organization that you're using their contracts and you're trading trusts and LLCs, you could potentially be identified as an investor. And you just heard my story and you do not want to be involved in this. Now, if you are involved in something like this, I would try to get out of it. I know it's hard because you're benefiting right now from it. But from experience, it's better to deal with it early on rather than suffering the consequences. Because when I told you that I had that huge debt, understand I'm paying interest and penalties and the bill for all these years. So it started in 2010. I finally paid that bill off in 2023. And they did not give me a single discount during the pandemic when they weren't working in their offices. So I wasn't able to negotiate. And furthermore, I was not even given the notice that this was some ruling in the court. You don't want to mess around. I'm sounding very morbid, but I just really care about everybody watching this. And I would hate for anybody to make the same mistake that I made, just, thinking that it's no big deal and everybody does this type of investment when we know, like, it's blaringly obvious this is fraud. Now, I think it's important for you to know that both my husband and I are very serious about our finances. We have FICO scores, both of us over 800. And I'm not bragging. I'm just trying to explain to you, like, the importance of financial responsibility that my husband and I take. It's important for me to have you know that because it didn't matter when it came to the IRS. They literally seized our bank accounts, meaning they found as many bank accounts as they can and just took every single penny out of our bank accounts to pay for this large, huge debt that we owed, which, by the way, wasn't our debt. It was somebody else's debt. And they took away our passports. I had a trip that I was planning to go to Europe, and I wasn't able to go because I was a high flight risk. And they put a huge lien on our property for some ungodly number. And we were stuck. We were treated like second-class citizens, and there was no one we could talk to. It was like they were on a warpath. Now, once again, I'm not trying to talk bad about the IRS or the government. I'm just telling you that you don't want to mess with it. They don't care about all your previous payments. They don't care about your credit history. They don't care that you're working. They want their payment, and they don't care. They don't. Now, I know there's going to be a lot of people that have done this and tell me I'm crazy. I don't know what I'm doing. And, I'm not creative. And I need to really get comfortable with creative finances. And I'm the old school realtor. And I don't know what I'm talking about. Well, honey, I'm telling you, anybody that is doing this type of thing, they're probably young, they're probably inexperienced, and they haven't had the battle wounds that I've had. And you don't want to go through what I've been through. Now, for those of you who, might have those low FICO scores, or you are struggling for your down payment, or you don't have a good history of work experience, and I know it feels like you're never going to own a home. I've been there. Like, I've been in a lot of bad situations financially, and I can tell you that if you're motivated and determined to do it, it will happen. It just feels impossible right now. I get it. Align yourself with a good financial advisor. There are a lot of programs out there to help people get into properties. It's getting better because we know we have a housing crisis right now. The homes are just too expensive and there's just not enough of them around, which means it's only going to continue driving prices up. I mean, who knows where this is going to happen with this real estate. But don't get discouraged. But I highly recommend that you don't do something like this, buy a house subject to the existing mortgage. It could devastate you in the long run if the government decides to go after you. Just not worth it. Okay, that's it for me. I know that was a long one. I know people are like, why are you doing this? And the reason why I'm doing this video is because when I went online, I realized there wasn't enough videos sharing the counterpart to this. So I hope for those of you who are watching that you heed my warning, and I hope you got some benefit. And please smash that like button and subscribe to my channel. I wish you best of luck, and let's have a good year. Do I need to say anything else? Please subscribe.